Wednesday, January 7th, 2026, Monaco 64, home of alternative economics and contrarian views. So, yeah, we've had about a week this year so far. Yeah, first week of the year. And the world is becoming even more and more chaotic and turbulent, and it's not going to change, in my opinion. We've had the 25 years or so of relative peace and globalization, and no disruptions really, except for during COVID. But now it's getting really, really chaotic. I think it's a free-for-all, and when the world becomes more uncertain like that, I think hard assets and safeguarding them become more and more important. And talking about hard assets, we're going to look at silver, because I think silver, relative to like the S&P and the NASDAQ, is pointing to a much bigger move towards hard assets, and especially silver. So we're going to look at the S&P to silver ratio today and the NASDAQ 100 silver ratio. Very interesting charts that I hadn't really looked at before, and someone noted those charts to me a few days ago. Before we go into that and look at what the markets are doing this morning, just want to talk about what I did yesterday. A lot of you very generously send me stuff via Gold Investments. So I go up there regularly, maybe 2 or 3 times a month, up to the City of London, just to have a chat with Oliver and Simon Temple. They are, of course, my affiliate precious metals dealer. And yeah, lo and behold, there's something there for me from Harry in Delaware. I'd like to thank you, Harry, for sending me a really nice card. Peace on Earth. Yeah, I think it's always been my objective to be a peaceful individual. I know we can't depend on governments to be peaceful, but there's always hope. Right now, doesn't feel like there's much hope for that. But anyway, aside from sending me a really nice note, Harry sent me a series. Well, he sent me 10 $2 bill notes here. They're in mint condition. So, yeah, $20 in total. I'm not going to be getting rid of it, of course. It's more of a collector's item. They're all from 2017, and they're assigned by Secretary of the Treasury Steve Mnuchin from the first Trump administration. And the serial numbers are all in order, which is really nice. But more interestingly, Harry told me in the note, he said that the banks in the US, they're not giving out pennies anymore, because it probably, well, the pennies cost more to produce than the face value. And he also says it now takes one of these to give you the purchasing power of a penny. Probably when Harry was growing up, I would say. Not recently, of course, but I looked at the price of silver, though, and the last time you could buy one of these, and this is a 2023 Silver Eagle. There you go. I don't remember how much I paid for this, because actually someone sent me 25 of these, which was really generous. So that's from 2023. And I looked at the last time you could buy an ounce of silver for $20, fiat dollars that is, of course, was in March of 2023, which isn't that long ago. It's less than 3 years ago. Now, with silver trading around 80, you can only get a quarter of an ounce. So it just goes to show you how rapidly the dollar is devaluing. But it's not just the dollar, of course, it's all fiat currencies. The other announcement I wanted to make is I met another follower of the channel yesterday, which was really nice. He's been following the channel for years. His background is also in the city of London, but he's been a major gold and silver mining investor. And yeah, we met for a coffee with one of his associates, and he's originally from Australia. His name is Jeremy Gray, and he gave me this hat. What is Chancery Royalty? Well, it's a very interesting project. It's a brand new royalty company, and it still hasn't gone public. So he spoke to me about what they're doing. Very nice guy, very legitimate, and yes, he came along with, as I said, with Tom Pupendal, who's a legal head of legal and a director of the company, Chancery Royalty. So I'll talk a little bit about Chancery Royalty if any of you are interested in gold and silver royalty companies. It is a pre-IPO investment opportunity, and I like to say this is not investment advice. I'm just giving you, let's say, a heads up on this opportunity. It's up to you to do your homework and to decide whether it's something that suits you. So just talk a little bit about Chancery Royalty. Well, they've raised equity. It's a fast-growing company with 3 producing assets in the USA, Finland, and Brazil. The pre-IPO valuation is a fraction of its peers, so there's significant near-term upside potential, strong growth pipeline towards becoming a major royalty platform. And the management, right, Jeremy and the other guys, they have a proven track record in gold mining acquisitions and financing. I think Jeremy and Tom were involved. They were initial investors in K92 mining. So when they talk about their peers, they're talking about companies like Gold Royalty, which I've profiled on the channel, Versamat, and also Elemental. And you can see by this little chart how undervalued they are. So if you want to find out more about Chancery Royalty, you can request an investor pack. I'm going to put a link below in the description. Get in touch with them and have a look at this opportunity. It's pretty interesting, I would say. And the advantage of gold royalty or royalty companies is that you leave the day-to-day running to the companies, and you only have like a financial stake, and royalties pay you every year. Yeah, there's a lot less risk. So it's one of the ways to have exposure to the gold and silver sector, mining sector. Anyway, back to silver and what I said. I really think we're going from an age of financialization into a world where hard assets and real things become even more important. It's becoming even more important that the President of the United States has gone to another country, apprehended its president, and now he's looking to go and take 50 million barrels of oil from that country to the United States. Yes, that's how important commodities are becoming. I mean, if you don't see this, I really can't help you, but and as Zoltan Pozsar, who used to work for the New York Fed and Credit Suisse, said about 3 years ago now already that the dollar used to be other countries' problems, but now commodities are countries' problems. So yeah, I think this is what silver is telling us. Not just silver, of course, but gold. Silver is starting to catch up with gold. And not yesterday, but a few days ago, a friend of mine told me about these ratio charts. So I had a look at them. So it's the S&P to silver ratio. It's just like the Dow Gold ratio, but it's in terms of the S&P. And I've got the monthly chart here, and it goes back to 1890. So it's a very long-term chart. But as you can see, we're at around 88. So you need 88 ounces of silver to buy one S&P right now. And you can see, though, that back in 2000, you needed about 300 ounces of silver. Back in 2020, or recently, you still needed above 200 ounces. More interestingly, back in 1980, when silver topped at $50 or just under 50, you only needed about 3 ounces of silver to buy one S&P, and this is on a monthly closing basis. I think intraday you needed about 2 at one point. So you can see that we still have a lot of room, not just to go back to like 3, but also even if we go back to where it was in 2011, around 30, there's still a long way to go. And this chart looks very bearish to me, which means that I foresee that silver is going to continue to outperform the S&P. And it's good to look at it in terms of the S&P, because the Dow, I guess, is not as representative as the S&P. And then if we move to the NASDAQ 100, same kind of chart, but it only goes back to the mid-80s. NASDAQ 100. And back in 2000, you needed almost, around 900 ounces of silver to get one NASDAQ. Until recently as well, it was as much as 790. Yes, it's come off a lot. It's at 326. But look where it was, back in the mid-80s. But also in 2011, you needed about 40 or 42 ounces only, and we're at 326. So it's not going to be a straight line, of course. Nothing goes down or up, for that matter, in a straight line. And before we wrap up, just have a look at the markets this morning, because they've been quite volatile, I would say, especially for the precious metals. It's 8:18 a.m. London time, and the reason I give the time always is because you're going to be watching this a lot late. Well, sometimes a lot later, sometimes not so much later than when I've recorded it. But the price will be completely different, and that's why I use that. So right now, for example, gold is trading at 4,466. It's down $29. Yes, 2/3%. It seems a lot, but it's not that much anymore. $20, $25, especially considering where we are. But it has been as far down as 4,441 and as high as 4,500. Right now, a bit of resistance around that 4,500 level. But more importantly, we're going to look at silver here, what's going on. Of course, yesterday, silver did really well. We traded above 81 before the end of the day, I think. The all-time high is still around 84, and that was late last year, during that Christmas period where we saw silver actually go up $10 or 10% in one day and then come down about 10%. We got up to 84, so we still have to break through that all-time high. Same thing for gold. The all-time high is 4,550. But right now, for example, silver is down about $1.50. It's trading at 79.80, so just below 80 the spot price, but it's been as low as 78.20. So what's going on? Well, I've always told you that the higher we go in gold and silver, the more you have to hold on to your gold and silver for dear life, because it's going to get very choppy, and you can bet that the usual suspects probably triggered a few stops. They're still trying to hold on to their shorts. They're still trying to get out of Dodge, so to speak. But I think they're going to fail. They're going to fail because, as I said, the world has changed. Nations, financial institutions, individuals, they're starting to realize you need physical. You can't really trust paper anymore. We're going from 40 years of financialization, which is basically just paper. And I'm not saying financialization will end, but physical things and commodities are going to become more and more important. And that's why I think this is just what it is. It's just a correction. And I've got here my end of year numbers for performance of various assets. And gold settled 2025 at 4,322. So we're at 44.68. We're up about 3%, maybe more. Haven't done the exact calculation. And silver is trading around 80, so we're up more than 10% already in a week. So keep that into perspective, I would say. And I'm hearing from my very good source who knows a lot of people high up in the central banks that even European central banks are starting to look at gold and silver, which is unusual, right? The ECB to look at gold. They're actually buying gold and silver. I heard that yesterday that they were in the market. And if you look at the ECB, it has member banks like the Bundesbank, Bank of Italy, Bank of France, and so on. And the Bundesbank, the German central bank, and Italy, Bank of Italy, they have a lot of gold, but the ECB itself doesn't own any gold, I don't think. So why they're starting to buy gold? Well, I think it's because the world is becoming more and more uncertain. We're hearing now that the United States will even think about using force to take over Greenland. And Greenland, of course, is part of Denmark, which is part of the EU and part of NATO. So I think the world is changing rapidly, and I'm not surprised the ECB has thought that it's prudent to get some gold and silver for that matter. So with that, I'm going to wish you all a very good day. Take care. Bye.